As mentioned, some assets like crypto went up significantly, and the asymmetric risk-reward section reached a maximum of 2.75%, which is above 30% return in 1 month. Hi, welcome back to the monthly portfolio update. I hope you'll find the information in this video useful, but disclaimer, please know that this is not investing advice. It's just my portfolio as it stands on Wednesday, November 1st, and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful, since it's your responsibility to do your own research before investing. In today's bonus section, we see the coffee can portfolio. But first things first, let's begin as usual with the latest portfolio update. This month, I continued buying a little bit of Bitcoin in the light of the upcoming approval of the ETF, hopefully by early next year, and didn't really sold anything but converted my ETH to BETH and staked it at 4%, but Binance automatically unstated for some reason a little while later, and I lost some ETH when converting back into it. Very little, but still enough to mention it as an outflow. Stupidity costs money. In terms of cash flow, I received a very small dividend from Novofer and a coupon for one of my Romanian government bonds. What I also realized I didn't mention before is that I also get some small amounts of interest on my cash positions from the bank's trading platforms where I keep the money. And in these uncertain times, any cash flow is welcome. So, ending another relatively uneventful month where, except for the small crypto play, I didn't buy anything else. So this is my portfolio as of November 1st, 2023. The overall portfolio kept its return year to date at 5.1% plus my living expenses, even though the S&P dropped significantly because I had other assets like gold and crypto that went up significantly this month and covered the loss in stocks. One note related to Fondul Proprietatea, the administrator, Franklin Templeton, issued a buyback at 0.63 RON per share, so about 30% above the current market price. But it's pro rata, so I expect to sell a minimum of 11% of my shares, but more likely somewhere between 20 and 25% until December. I want to make a full exit this year from Fondul Proprietatea and actually from other assets as well, since I think that I have too many open positions and want to slowly close some of them because my 40th idea cannot be as good as my first, and frankly, it's a bit hard to follow and evaluate so many assets. The pyramid allocation portfolio this month looks like this. As mentioned, some asset classes like crypto went up significantly, the asymmetric risk-reward reaching a maximum of 2.75%, which is above 30% return in 1 month. That's the reason we invest in this class, wink wink, and hopefully it will go to the moon when the ETF is approved. Other than that, gold also had a great month, and as a note, the gold price rose significantly, but the gold miners ETF, the G2X, didn't really move, so hopefully it's just lagging behind for a little bit. Before going to the bonus section, please don't forget to like and subscribe to the channel. It really helps bringing this completely free information to more and more people. Today's topic, the coffee can portfolio, is somewhat of a continuation of last month's index investing topic. The main idea is that you can make more money being passively active than actively passive. The story is that cowboys used to keep their most prized possession in a coffee can and hide it under the mattress. They had just a few valuable things. They were very picky because there was very little room inside the coffee can. They really didn't touch it or open it for a very long time, so that others didn't see that they were keeping anything of value in there. There were also no costs and they didn't need to go to the bank. It was very easy to transport and protect. So that is the original idea, but how does it apply to investing? Well, it fixes some investment issues like over-transacting, distinguishing between activity and results, or selling too soon because it went up, quote, too much, which is a very widely spread mistake. Also, constantly watching the portfolio. like tracking the news, price movements, the macro changes, etc. I strongly recommend reading the full Robert G. Kirby article for free. It's only 5 pages. It's a very interesting read. The main idea of the coffee can portfolio is to buy right and hold on, which is what we try to do with the very small number of transactions that we do every month, and use the idea to get 10 baggers, which is a term coined by famed investor Peter Lynch, meaning multiplying your money by 10x or more. Let's see a few of the coffee can's portfolio characteristics. First, you need to hold for a long time, 10 years or more, so patience is key. Secondly, you need to include a very limited number of assets. Your 20th best idea will always be worse than your first 2 or 3 ideas. And last but not least, we need to choose outstanding companies that have a lower entry price, because high multiple stunts growth even for awesome companies. An AST7 PE forward is hard to catch up with. Then the company needs to have long-term profit potential. For that, they kind of need to be smaller, unknown, or unpopular companies. These things are somewhat connected, because if it's a popular company, the PE will be higher, and it's hard for a $1 trillion company to grow 10 times or more. They need to have big markets, ideally a global market nowadays. They need to have significant insider ownership, especially if they bought the shares themselves, they were not granted via an options package or something similar. And of course, the company needs to have high earnings growth. If you are interested in this, I shared some books that discuss the buying right and holding on principle below, starting with, of course, the grandfather, Peter Lynch, and also we have some 100 to 1 books that are more recent. So, the logical question is, does now the paper oligarch, yes, I'm talking about myself in the third person, I know, is he now dropping the pyramid allocation portfolio and uses the coffee can approach? Well, not quite. As I mentioned in a previous video, the Earth Core portfolio, see link down below, there are quantitative and qualitative ways to view a portfolio, and the two are not mutually exclusive. So, the coffee can portfolio can be used as a subset of your investment portfolio, maybe as part of the asymmetric risk-reward allocation. View it as a portfolio of portfolios. I always wonder, how does the Cathie Wood ETFs get so much money, since they have huge ups and downs. However, nowadays every person can become somewhat a manager of money managers. Like, if you have most of your money in real estate, maybe you own some condos or a shopping mall, you might want to put a small part in the innovation ETF, just because you are somewhat diversified and protected and want to participate in the technology upside. So, in your own portfolio, you can have cash flow generators to pay the bills every month, dividend, bonds, etc. A part that you allocate to education, which you can do mergers and acquisitions, or companies that, based on your research, will have a somewhat sure but limited upside, and you want to pick some of the winnings. Then you can have a trading portfolio. You might feel the need to, quote-unquote, do something. I know I'm guilty of it myself sometimes. And you can actually allocate a smaller part of your portfolio for this alone and leave the long-term compounders to do their job. So that's it from me. Let me know what you think about the coffee can portfolio in the comments below. And I hope you enjoyed the video. If you did, please like and subscribe. And see you next month. Au revoir.